Hey guys, welcome back to a brand new video. I'm RexFinance, and man, do we have some things to talk about today, because for starters, the NASDAQ finished the trading day up 4.23%. You heard that right, 4.23% in a single trading day. That has to be a top 50 trading day of all time, because it is not often we get a 4% day in the NASDAQ. But even with how exciting a day like today was, with a lot of our favorite stocks up 5 to 10%, or even over 10% in some cases, today has also come with a lot of confusion and doubt as to whether or not this rally is going to hold and is going to stick. So in today's video, that's exactly what I'm going to be talking about. Why I believe that this rally is going to stick and that the bottom is behind us. This is something that I have been committed to for the past couple of weeks. I have not gone back on my word that I think the bottom is in. And because of that relentless commitment that I had, that I believe the bottom is now behind us, one of my viewers said I have 80s style cokehead energy. Another viewer called me a fool. Another one said, come talk to me after the Fed raises rates on Wednesday. Somebody called me insane and told me to go back to school because I have no idea what I'm talking about. And the list goes on and on and on. But point being, I'm not just your average YouTuber that makes doom and gloom titles and doom and gloom thumbnails to get you to click on the video. I give you my honest opinions regardless of what other people think about my opinions or even about me. And if that interests you, please subscribe down below. Also leave a like on this video, and also leave me a comment on how much your portfolio was up today and what your best performing stock was in your entire portfolio. Without further ado, let's go ahead and jump into this. All right, let's go ahead and address this confusion and why people are doubting this rally. And for starters, Microsoft and Google both reported earnings yesterday and both reported terrible results. Microsoft missed on EPS by 2.7%, and they missed on revenue by 0.94%. Google missed EPS by over 6%, and they missed on revenue by 0.16%. But their stock prices did the opposite today. Google responded to these horrible numbers by going up 7.66% today, and Microsoft responded by going up 6.69%. We also got some other bad news today when the Fed raised rates by 75 basis points, or 0.75%. And Powell said he expects further increases to the interest rate, even as some indicators are showing signs of softening. Both those earnings reports and the Fed coming out and raising rates would lead you to believe that today should have been a very, very red day. But it wasn't, and this is why. I talked about this in my most recent video, but people forget that the stock market is always trying its best to price events in way ahead of time. And in doing so, the stock market tends to overreact, whether that's to the upside or the downside. Before today, Google was down by more than 30% from its all-time highs, and Microsoft stock was down by more than 25% from its all-time highs. And that happens for a reason. Even though the news that came out today was bad news, and these earnings reports that these companies reported yesterday were very bad earnings reports, the stock market still moved up, and those individual stock prices also moved up very dramatically. And this is where people get very confused and start doubting the legitimacy of this stock market rally. However, you have to think about it this way. Remember last year in 2021 when companies would come out with really, really strong earnings and really, really strong guidance, but their stock prices would fall? That's because the market's priced in perfection, absolute perfection. And even though those companies came in with great results, their stock prices fell because of what the stock market had priced in. It's the same thing on the downside. The stock market has priced in very, 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 very bad news. So when companies come in with just bad news, or we just get bad news with the interest rates going up 75 basis points rather than a whole percentage point or 100 basis points, that is better news than was expected, even though it is still bad news. It's very counterintuitive to the human brain, so it makes sense that you might be confused about this. But put that on the back burner, because you do not want to miss out on this rally if it stays legitimate. Because the stock market is already up 10% from lows, which means a lot of stocks are also up 15 to 20 to 30% from their all-time lows or their 52-week lows. That's already a ton of return on investment that you might have missed out on, and you are going to be forced to buy back in higher or remain sitting on your hands and not making any money at all and losing money to inflation. And it's just a simple fact. There has been no time in history where when the stock markets were down 20 to 30%, it didn't end up being a good buying opportunity. And I know lots of people like to disagree with me when I say I'm buying now, and I think right now is a good buying opportunity. But can you point to a single time in history for me where when the markets were down 20 to 30%, it didn't end up being a good buying opportunity? If you can show me one single example of that, I'll change my mind. I won't commit to this being a good buying opportunity. But until that happens, I'm not changing my mind. I'm sticking with my thesis. If you want to see something crazy, look at the forward PE ratios for Microsoft and Google. For Microsoft, the forward PE ratio is 24. For Google, their forward PE ratio is a 19. And for Clorox stock, the Clorox company, the stock market is paying a 27, almost 28 times multiple to that company's earnings. That is when you know stocks are at a discount. It does not make any sense that you should be paying more for Clorox's future earnings than you're paying for Microsoft or Google's future earnings. Microsoft and Google are two of the best companies in the entire world. And this is how you know that the stock market has entered true fear. When the stock market starts paying 27, almost 28 times earnings for Clorox stock, and they're only paying 19 times for Google stock and only 24 times for Microsoft stock. And this is probably why Clorox stock was down 2% today, while Google was up over 7% and Microsoft was up over 6%. This is not healthy. This is not going to stick. This is going to reverse. Microsoft and Google's future earnings are worth much more than Clorox's future earnings are. So now you may be wondering what I am buying personally right now. And tomorrow I'm going to post a video specifically for that purpose. I'll discuss 3 specific stocks that I have been going out there and buying, but in today's video I'll give you a quick preview. I have been loading the boat on small cap stocks, and let me tell you why. Usually when you come out of a bear market or a stock market correction, the small caps are the stocks that actually lead the way. They outperform the S&P 500 and they outperform the NASDAQ, but you'll see that since lows, the small caps are vastly underperforming. You can see the S&P 500 from its lows is up about 9.62%. The NASDAQ is up over 13% from its lows, but the IWM, the small caps, although they're up 12%, they are not outperforming these other indices like they should be if this rally is legitimate. But my explanation for this is the simple fact that interest rate changes affect smaller companies the most out of any company out there. That's because smaller companies tend to be more cash strapped. They tend to need more capital to invest in their business, to grow their business, to pay their employees, etc. And if interest rates go up, that is going to negatively affect the small cap stocks the most. However, now that we have some clarity after today that the Fed has raised rates by 75 basis points, I fully expect the small cap index and small cap stocks in general to start vastly outperforming. We don't have another Fed meeting or interest rate hike as it stands now until September. So there's a good 2 months or so now where we're stuck with the interest rate we're at. There is no uncertainty about what companies are going to be paying to access capital. Also, over the past 5 years, the Russell 2000 has only returned 29.2%. That is abysmal. That is terrible return. For comparison, the S&P 500 over the same period has returned 62%, and the NASDAQ has been insane. It has returned 113% over the past 5 years. And whenever one of these indices are way out of whack, like the small caps are right now, how they are underperforming, typically there's a day of reckoning where small caps are going to catch up to that performance and they will no longer be underperforming so significantly. So there's a couple of things that are leading me to believe small caps are the place to be right now. But one last thing I want to cover are forward PE ratios. I've already discussed these a little bit in today's video with Microsoft and Google, but the average forward PE ratio for small cap stocks right now is 11.9. There have only been 2 other times in the past 23 years where forward PE valuations for small cap stocks were this low. One of those times was in March of 2020 when the entire global economy shut down to the COVID-19 pandemic, and the other time was during the financial crisis of 2008 and 2009. I personally don't think that the economy we're experiencing today is near as bad as either of those 2 situations are. I tend to believe, based on the small cap companies and the balance sheets I've looked at, that small cap companies have very healthy balance sheets right now. They're growing their businesses tremendously, and there's no reason that the valuations should be this low on small cap stocks. So between the historically low valuations being put on small cap stocks and the fact that they've underperformed so much, I truly believe that small caps are the place to be right now, which is why I've positioned my portfolio in accordance to those thoughts. I always could be wrong. I'm not a financial advisor. I'm 21 years old. I'm speaking through a microphone to you guys watching this video on YouTube. Please don't take any of this as financial advice. But if you do want to see 3 specific small cap stocks that I have been buying in this market, make sure you come back tomorrow for my video that I'm going to upload tomorrow, where I'll discuss those 3 stocks. But until then, subscribe below if you're new here or returning and not yet subscribed. Like this video if you liked this video, and don't forget to comment how your portfolio performed today and what your best performing stock was. With that, have a great rest of your day, stay blessed, and peace out.